All right. Good morning, family. Can you hear me? Okay, my apologies for starting by this time, rather than 20 minutes earlier. So today is a beginner call, right? Today is a beginner call. What are we discussing? Now, that of today has to do with Forex, not HFS this time, right? Forex or MT5. We're talking about one, yeah, reversals and continuations, right? Trend reversals and continuation. Trend reversals and continuations, right? Okay, who knows? Let me see. How many are we here? Okay, just a few. And let me see. Zoom user Mandy. Mandy, it's like this is the first time I'm seeing you here. Okay. Who among us here, apart from Witty Mike, I believe Witty Mike might know how to draw. You know how to draw an accurate support and resistance. If you
Yeah, yeah.
amazing, amazing, amazing. So I'm assuming all of us here know how to draw support and resistance. Both Mandy, Zoom user, and Witty Mike, right? Amazing. Okay, you're new. You're new. Mandy is new. Mandy is new. Okay, all right. So this call is purely for Mandy, right? So we don't get to misplace anything. Just a minute. All right. So what you need here, when you look at the chart, right? You need to first determine a trend, right? You need to first determine the trend. And how to determine the trend, right? Of any pair you're looking at. Right now, you're looking at Euro USD. Okay. You're looking at Euro USD. And this is the analysis we did yesterday for our HFX, right? For our HFX. So anyone that was on the call yesterday will see that the market at the end of the day, later, this was yesterday, yeah, Wednesday. Market at the end of the day, later came back to this zone, respected and disappeared, right? So we are not talking about yesterday, whatever we did yesterday. We're talking about today, right? So one of the ways to determine the trend of the market is looking at, first of all, knowing the highest points you can see on the chart, the highest point and the lowest point. You don't need to zoom into ever. But so long, right? On any time frame you're on, we are on 15 minutes time frame right now, and zoom the chart in a way you can see the candles well. Once you can see that, mark the highest point you can see and the lowest point you can see, right? So in this case, let me shift this over here. In this case, the highest point you can see here, let me delete this. In this case, the highest point you can see here is this, right? And my lowest point is this. I mean, lowest visible point I can see. I'm focused. I don't care whatever happened down here. I'm focused on this from this point to this point. That's my focus. Now, now, how do I know? In fact, first of all, this has already told you that okay, this is an uptrend because we have a very good high and we have a very good low. Next thing to check is after that lowest point, where is the next high? This is our next high, right? followed by a higher low, okay, followed by a higher high, followed by a higher low, followed by a higher high, followed by is a low as well, a higher low. Okay, this is like the smoothest high and low I've ever seen. Followed by a higher high, followed by a higher low, followed by a highest point. Then last on the list, the new low we are currently seeing. Which you can tell if this is like the main low, it might still come down, right? So with this now, we can tell that this is a clear uptrend. And what do we do? Oh, Bambi. Okay. Okay. All right. Amazing. So what do we do when we see a trend like this? We are only focused on taking buy positions. Yesterday we shared HFX. This time around, we are dealing on pure MT5. So in this case, you are factoring both your stop loss and take profit zone, right? You are factoring both your stop loss and take profit zone. Now we've determined this. What is our next target? Our next target is knowing the market's new low, right? How to know the market's new low and mark it, then anticipate for the market to break this high. That is all. That's your business on this particular chart. Spotting this market's new low, right? And getting it so that you can target this high. Because if you can see, if the market repeats itself, then if I can get the market's new low, I am certain that it's going to break the former high, right? If I can get the market's new low, I am certain it's going to break the former high. If I can get the market's new low, I am certain that it's going to break the former high. If I can get the market's new low, I'm certain that it's going to break the former high, right? The former high. Maybe should I use line so that you can see what I'm talking about? This is a former high, one. So it was broken here. This one was broken. Oh, this one is like almost the same point self as this, right? We have this. That is it. So how do you know the market has changed? In fact, how do you know this market is ready to start buying? Right? Now, remember, we are starting from 15 minutes time frame, right? You might need to, we might need to break this thing down to like the lowest time frame. So, Bambi, you're new. Let me introduce you to one terminology: market imbalance, right? Market imbalance. Imbalance is like a magnet, right? That attracts the market, that attracts price to it. In fact, an imbalance is like a price magnet. Just like chemistry, once a reaction is not balanced, we have to keep doing it. We have to keep reacting with different compounds until it's balanced. That's how the chart is. Yeah. So long there's an imbalance somewhere on the chart, it's just a matter of time for the market to come back to balance that reaction. When you're talking chemistry terms, right? So let me show you what imbalances are. This is what an imbalance is: a space between two candles, right? Let me see if we can get one before I now show you the one we are looking at here. A space between two candles. I want to go, yeah, I've not actually drawn anything so that you can see how clear it is. This is an imbalance. Bambi, this is for you, right? A space between point A and point C. This is point A. This is point C. Or I'll actually label this. This is, I'm talking about candle A, B, C. Okay, no. That shouldn't be it. Candle A, B, C. All right, perfect. Let's zoom this out. Mm. Right, oh, I think this is already pretty zoomed out already. Uh-huh. Oh, now these guys are now messed up in a way. My point is just to show you something, but I think let me take these guys off. So it doesn't even confuse you anymore, right? Let me take these guys off. I want you to get this point, right? Bambi, this is for you. Okay, not Bambi. Mandy, this is for you. Mandy, this is for you, right? Let me take out this line.
I can hear you. Thank you.
Amazing, you're welcome. So let me change this color to something like yellow. Nigga, change to yellow, man. Oh, yellow, yellow, right? So there's no yellow thing, right? Any space between, this is candle A, candle B, candle C. The space between the tip, the high of candle A and the low of candle C is an imbalance, right? What it's telling you is that there is an unbalanced reaction in here that the market needs to, at one time, come back to balance out. And what happened here? After the market came back after 30 minutes or within 30 minutes, second candles, this is 15 minutes. They, after the whole three, yeah, first the second candle came in here, respected, and disappeared. So if you are able to spot imbalances like this in the market, that is your good entry point for either reversals or trade continuation. Now, you don't just mark this, you couple this with your support and resistance. All right. Support and resistance means having a very good area that has series of rejections both ways. Be it, I don't know, I believe you're getting that as well. Having a very good area with your support and your resistance. Yeah. You don't just want to pick this at any point, just any point. Right. Right. So this can also be a confirmation for a reversal you want to trade. Let's say you want to take a, let me see. Okay. Now looking at this is a pure. I'm seeing, okay, let me use the zone instead. Which means not necessarily. This is a confirmation, right? So no, first off, watch this. Yeah. What am I seeing here? This is a support. This is a resistance instead. Market can resisted here, resisted, resisted, then finally broke, right? Rule of Zonda is break and retest. This will make more sense on the 5 minutes time frame, right? So what the market do to this zone, it closed above it. The what next? It came back down to it. So this is like a normal confirmation for a buy move. The market has broken a resistance. Now it has turned into a support. This is actually good. Let me go in. But then, if you need an extra confirmation, on a move like this, you might want to have the market respect this, right? You might want to have the market respect this. So you have the imbalance, then what happened? The market came back. So if you're looking for an entry point, this is your entry point. With a long, whatever I have here. Just below that fair value, or just at the tip of the imbalance. I call this imbalance fair value gap, right? Have your stop loss either below the candle A that gave rise to the imbalance, or the candle that gave rise to the imbalance, this one. Then you extend as much as you can. Now, I wanted to break this down for Monday, so she'll get it, right? So in that case, let's go back to where we were. Okay, around. Let's go back to where we were. What did what did you skip? 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 Just type it out so that I don't know what you skipped. But look at this. I don't know what you skipped. The imbalance, like it came in, your entry just at the tip of the imbalance, right? And yeah, this is it. This is the zone. It comes into the imbalance zone. That's where your entry is going to be. Your stop loss is going to be either below the candle that gave rise to the imbalance or the first candle. We have like three candles when it comes to fair value gaps or imbalances. You can take it below this one or on this. Then, of course, you're good to go, right? You're good to go. Choose, of course, I'm still, if not on this session, I'll get to show us again how to know your target zones when you're trading um, stuff like this, right? You're welcome. So back to this. Monday, this is for you. Let no one distracts you on this call. Now this is for you. Now, what led us to showing that is now we've seen that this market is coming down. We've already determined that this is an uptrend, right? We already determined that this is an uptrend. We've had our highest points, low, we have our highs and lows. But also what we haven't done here is marking support and resistance zones, right? We haven't done that. Why? Because it's a crazy trend. And sometimes there are no perfect trends. What do I mean by that? It's time to clear these guys. Permission to clear off these baby circles, right? In fact, let me draw something. What I mean by perfect trend is having something like this. Perhaps this is support or whatever, support resistance, whatever the line is. I have something like this. Then, of course, the third. Perfect, 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 perfect. What I mean by perfect is you have the market, respect the support, respect the support. Okay. Respect the resistance for a while, breaks it, then come back at that exact point. This is zoned, right? But it's not always like this. Respect this, respect. This is like the sweetest kind of zone you can ever see when trading. Then, comes back to here, and that's it. The market doesn't always give you this perfect reaction. It doesn't always do that. What you can see sometimes is the market might not even get to that point. In fact, the market can even break it and make the former low. can come back here, respect this former low self. Market can do this, then do this. Sometimes the market can just do this, respect. It will never come down to that point. If you keep waiting for it, it's never gonna come there. I just do like this and keep going. Right? This is the case sometimes, right? Sometimes it can be perfect. Sometimes it might even get lower. In fact, I've seen good can do this. To get lower than this low here, then create a new high immediately. It happens. All right. That's what I'm saying. There is no gold does this, like just this move here. Gold does it really well. Right? Take out the lows here, take out the highs here, and keep going. Right? So you don't just fixate your mind on I must get a perfect reaction in my support and resistance zones. Okay? So that's about that. So what are we seeing here now? The market has started making a move. So we are safe to say that this is our new low. But how can we really tell? Now let me show you something. If your analysis is on a particular time frame, go down. This is an uptrend. Quite all right, yes. But when you go down to a lower time frame, what you see from here to here is a low trend, right? So let us go down to 1 minute time frame just for this. 1 minute time frame. I think this 1 minute time frame is too big, sir. I think let's work with 5. Let me see if 5 will give me what I want. Okay, 5 is not really giving me what I want, but let us see. No, let's use 1. So with 1 minute time frame, we are seeing a high, a low, right? An equal high. But if you look at it very well, what you're gonna see here is a lower high, right? A lower high, an equal low, a lower high, a lower low, a lower, a lower, a lower, a lower. So we kept getting lower highs, lower lows until. So your key point now is to find the lowest point on this 1 minute time frame. And the lowest point is this. What are we trying to determine here? We are trying to determine the exact point the market shifted the structure, right? All right. So this is our lowest point on this 1 minute time frame. And what's the highest point you can see here? The highest low that led to this, the highest point that led to this lowest point we have here. This is the highest point. This is a high, a low. This is the highest point that led to this low here. I think these are all equal highs. I think I'm going to call this equal highs. Or I can choose to mark this however I want it. So I'll go with this. I'll go with this. Okay, let me go with this just to be on the safest side. Right? Okay, let me use this one instead. This is the highest point, right? That gave rise to this low. This is a high. These are a series of lows. I would have chosen this, but then let's just go for this, right? That gave point to this lowest low. In fact, you know what? Let me stick with what my mind is telling me. I'm just going to pick this guy. That's my focus here. All right. This is the highest point that gave rise to this lowest point in the market. And what did the market do? The market broke this. So on our 1 minute time frame, our downtrend is over. Our downtrend is over. This is tell us that we just kicked into continuation of the trend we saw on the 5 minute, 15 minutes time frame. All right. So our downtrend being over on the 1 minute time frame says that our pullback is over on the 15 minutes time frame. And if the pullback is over, we are ready to keep buying, right? ready to keep. What we need to look for next is a buying opportunity and diving, right? So let's say, assuming you're actually monitoring these charts and you saw this point, right? The market shifted structure at this particular point. The market, let me not speak so many terminologies. The market broke the last high. And which is this? The market broke the last high, came back, kept moving. What are you going to look for? What is your entry opportunity? An imbalance. Now, you've marked the lowest point, which is also a support area. If I extend this line, you're going to see that it's the same with this. If I extend this, you're going to see it's the same with this. But let's just work with the low, right? So you've determined that the market has broken the last high, telling us that a new high has been created, which is simply a change in trend, a change in uptrend. What next are we looking for? An imbalance to support the fact that this trend is actually moving right now. Who can see the imbalance here? Who can see the imbalance after this break? Can anyone see an imbalance after the market broke this last high? Can anyone see the imbalance? Can anyone see? Give it a shot. Give it a shot. We are 29 minutes in. Can anyone see the imbalance here? Can anyone see after this candle? Any imbalance after this candle? Any imbalance? Can you spot? If you can spot, just yes. If you cannot spot, just say no. At the top, at the top, at the top. Okay, around here, you mean? Okay. Okay, if you spot an imbalance, just keep it. Just keep it. Mark it. We are all learning, right? So I'll draw the ones I'm seeing. And you now tell, okay, is this aligning with what I saw, right? So the first imbalance I'm seeing here is that result. So the first imbalance I'm seeing here, I'm choosing to call this imbalance, right? It can also be called FVG, fair value gap, right? So the first fair value gap I'm seeing here, or imbalance, is this. The space between the highest point of candle A and the lowest point of candle C. Boom. And what did I tell us about fair value gaps? They are premium areas for entries, right? And having the lowest point here as your low, having the low of the candle A as your low, right? Or a little just quite below the candle that gave rise to the fair value gap, right? So let's say we entered here, right? We got in at this particular point, long position, but we don't care. We just enter at the tip. That's the way our business is. Web SL just right below here or right below here, as the case may be. So let's choose this. What are we targeting? We are not targeting much. We are only targeting our former high. That's our business. Because based on what we already know, that the market will break our former high. Where is that high self? This is it. This is our target. Our former high. That's all. That's all. That's our target. So if we enter there, we're already in profit. We are running. Now, see your risk to reward. 10, right? 10 RR. Now, one thing about breaking down your chart to the lowest time frame is that you get to risk just a little for an amazing reward. You get to risk just a little for an amazing reward. It's just like nanoparticles. Nanoparticles are like minute particles, right? You're breaking down this chart to the lowest minute points to get a reaction from there. And it is too clear for you, aligning with what you are seeing from the main time frame. Exactly, it matters. It matters. It makes you get the minute, I don't know, the lowest point possible. this thing we did here, we can do it on the 5 minutes time frame, get our entry points, move, right? But I brought it down to 1 minute time frame. This is like the lowest time frame possible, right? Watch this trade for today, right? And see if he hits. In fact, just watch it and see if it hits our SL. It probably might not. In fact, it will skyrocket before, or not before. In fact, if it doesn't hit the TP, it's gonna hit it right after 8 p.m., just after London session opens. Right? This is how we get stuff like this. Now imagine it's still simple. If you miss point A, look for another point, right? You missed this first imbalance. Look for other imbalances. If you can't see any, wait for the market keeps. That's why I said this is for trading your reversal and your continuation, right? Now, let's say I missed this trade generally. Yeah, I think it's safe to let me just remove this so that it doesn't disturb what we are trading here. We've already gotten our points, right? We have our zone up there. Let's say we missed this move entirely. I'm seeing an imbalance here. So this is a clear entry. Boom. The market has gotten. I missed there. I get in at this point. Now, me getting in at this point, I should know that there's no crazy imbalance below this area. It's safe to put my SL just below here. Still targeting where I'm targeting. Whatever high it is, I'm targeting. Right? I'll just keep it here. If the market breaks below this candle that gave rise to the imbalance, then that my move is invalid. If the market breaks below this and takes me out, my move is invalid. Right? That's how it is. If you miss the first imbalance, if you miss any fair value gap, wait for your work, right, on any time frame you are in is to spot imbalances and wait for the market to react in them. Right? Now, this pattern of trading is good for adding to your winning positions, jumping on a move you've missed, but don't jump in too late. Just make sure you're jumping quite early. So if you check what you are targeting, this market is still. Wait now. Let me show you on. This is still a baby move, right? You still have a long. So getting in here is still not late for you. Okay, getting in here is still not late for you. This is our target. This is where the market is. The market has not actually moved like up to 50% of the move actually, right? The market is still early for you, right? So are you seeing how the market respected that fair value gap and is going, right? So that's just it about it. And when you're adding to your winners, let's say you enter your first trade with like 0.1 lots, right? Your second one you're adding should be like half of the one you entered at first. It should just be lower, right? So you don't get sabotaging yourself because you want to add to your winners. You don't wreck your accounts if perhaps the market doesn't go the way you want. If you're adding to your winners, if you enter with 0.1, or if you enter with 1, next should be 0.5. If you enter with 0.5, next should be like 0.25. And know the amount of trades you need to add, right? So we've gotten this. We'll break this down even more. Okay, now let me now show you what happened on this call will end very soon. And I'm gonna show you what happened, where this pullback actually happened. In fact, who can tell where this pullback started buying from? Can you tell? Looking at these charts now, this pullback, what zone did it start buying from? What made it to start buying? Or like, what prompted the buying move? Are
On
you
the fair
seeing?
value gap.
So, who said that? Who said that? Oh man, amazing, amazing,
On the fair value gap.
amazing. So this is the fair value gap from the 15 minutes time frame, point A to point C. Boom. Boom. Are you seeing this? So that it's just like a movie, but it's not. It's just what it is, right? So whatever time frame, the main thing, just like I said yesterday for HFX, the best thing that can happen to you is having your lower time frames here align with what you are seeing on your higher time frame. And adjust it. Have your lower time frame align with what you are seeing on your higher time frame. And with that, you're good to go. Right? So imagine if you entered here on your 15 minutes time frame, you don't need more. Just boom, enter. The only thing is that it's going to make you have a longer stop loss, right? If you're supposed to risk like, let's say 4 or 5 pips on the 1 minute time frame, you might be risking like perhaps 10, 11, 12, as the case may be on the 15 minutes time frame. But at the end of the day, the idea is still the idea, and you're working with the idea without sabotaging yourself that much. All right. So that is his family on how to, with that thing I wrote down, say, on how to trade trend reversals and continuations on your MT5, pairing with support and resistance, highs and lows, and fair value gaps. Right? Tomorrow, we'll break it down even more. Today's for beginners, tomorrow is going to be for intermediates. We'll break it down even more. All right? So cheers and have an amazing morning. Okay? All the best, family.